Let us solve some recent ICAI examination questions of operating costing. C 12.12. X Limited distributes its goods to a regional dealer using single lorry. The dealer premises are 40 kilometers away by road. The capacity of the lorry is 10 tons. The lorry makes journey twice a day fully loaded on outward journey and empty on return journey. The following information is available. Diesel consumption is given, diesel cost is given, engine oil, driver wages, repairs, garage rent, cost of lorry, life of lorry, insurance, cost of tire, lives of tires, estimated sales value of lorry, vehicles license cost, other overhead cost. The lorry operates on a 5-day week basis. In a week, there will be 5 days as far as lorry is concerned. A statement to show the total cost of operating the vehicles for 4 weeks. So 4 weeks is a month, but we will be doing it for 4 weeks. So 20 days, 5 days a week. Period analyzed into running cost and fixed cost. So you will have to segregate your cost. What are my running or variable cost to run my lorry and fixed cost? Calculate the vehicle operating cost per kilometer and per ton kilometer. Assume 52 weeks in a year. So whenever a yearly calculation is required, I'll be taking 52 weeks. But this running and fixed cost, I want 4 weekly. So first, let me find out my ton kilometers and also my kilometers. Kilometers will be helpful to finding out diesel cost. Also, they want cost per kilometer answer. So it will be having dual purpose. I am finding out my ton kilometers as well as kilometers. So the lorry travels from your dealer premises regional dealer to premises. What is the distance? Distance is 40 kilometers. Onward journey it goes loaded and backward journey it goes empty. What loads it carry? 10 tons. What is the journey is done twice a day fully loaded and 5 days a week. 2 times a day and 5 days a I am finding out a ton kilometers. Working note 1. Finding out a ton kilometers. Going outward, it will travel 40 kilometers with 10 tons. Coming back, it will travel 40 kilometers with 0 ton. So answer will be 0. This is one round trip. This it does 2 times in a day. And this it does 5 days in a week. You will be getting answer for 1 week. Whatever is the answer is for 1 week because we have taken it for 5 days. So my answer will be 40 into 10 is 400 into 2 into 5. That's 4,000. 4,000 ton kilometers per week. So for 4 weeks, it will be 16,000 ton kilometers. How much lorry will travel in terms of kilometers? Going it will travel 40 kilometers, coming back it will travel 80 kilometers. This will happen 2 times in a day for 5 days a week. So this is 80 into 10 will be 800 kilometers per week and 3200 kilometers per. So I am having answer of 10 kilometers for 1 week also, for 4 weeks also. I am having answers of kilometers for 1 week also, 4 week also. The cost statement which I am going to prepare will be in two parts, running cost and fixed cost, and I will be preparing it for 4 weeks. So statement showing total cost, statement showing total cost will be divided into two parts, running cost and fixed cost. We will be taking a judgment which is whether it is a running cost or fixed cost. Rupees will be per 4 weeks. So I will be finding out each and every cost for 4 weeks. Diesel consumption is 8 kilometer per liter and diesel cost is 60 per liter. I am doing working note here itself. 1 liter cost rupees 60 and it will run for 8 kilometers. So 60 rupees can run for 8 kilometers. Then I want to run 3200 kilometers because I am calculating it for 4 weeks. I want to run 3200 kilometers. What will be my cost in rupees? A simple cross multiplication will give me the answer. 3200 into 60 divided by 8. It is rupees 24,000 and it is for 4 weeks because we have taken it for 3200 is for 4 weeks. It was 3200 into 60 divided by 8, 24,000 rupees. Is my diesel cost. Diesel cost is the running cost, variable cost. 20,000. Engine oil rupees 200 per week. Now try to understand, they have given per week, so it can be treated as fixed because it does not changes with number of kilometers traveled. But normally engine oil is a variable cost. More your car or more your vehicle will run, more it will be the cost. It can be taken as fixed, it can be taken as variable. Why fixed? They have given for per week. Why variable? Normal nature of engine oil is variable. So engine oil can be taken both. In this case, I am taking running because I want to match answer with the book. So it is 200 into 4. Engine oil, I am taking it running. (200) because I want to find it out per week and it is 200 per week, which will be 800 rupees. Drivers' wages are fixed 2,500 per week. Will be 10,000. Repairs is 600 per week. Again, repair can be taken as fixed, it can be taken as variable. But normally the nature of repair is variable. Given in this question, it seems to be fixed. I can take it fixed, I can take it variable. I am taking in this particular question variable. 600 into 4. Garage rent 800 per week is always fixed. This will not change with number of kilometers changing. Cost of lorry, life of lorry. and estimated sales value of lorry will give you depreciation. I'm calculating here itself. It is 9,50,000 minus 1,50,000 divided by life of the lorry is 1,60,000 kilometers. So I will be getting depreciation per kilometer traveled, which is 8 lakh divided by 1,60,000. That is 5 rupees per kilometer run is nothing but depreciation. Depreciation is a fixed cost. Yes, depreciation is a fixed cost if it is not based upon kilometers run. If it is based upon kilometers run, it can be treated as variable. But understand, we have learned this. So this is also can be treated as fixed, can be treated as variable. Your depreciation will be higher if number of kilometers run is higher. But what is the basic nature of depreciation is fixed. Why? Whether your lorry will run or will not run, you will be incurring depreciation cost. Say if you purchase a new lorry and you don't use it for 1 year, whether the value will decrease, the answer is yes. I am assuming it as fixed. And how much is the rate? 5. How many kilometers you have traveled? 3,200. So this will be depreciation for 4 weeks. 3,200 into 5 will be 60. Excuse me. So I have taken this. Insurance is 18,200 per annum. Insurance is fixed. Insurance 18,200 divided by 52 multiplied by 4. Divided by 52 will be 1 week. I want for 4 weeks. So 18,200 into 4 divided by 52. 1,400. Cost of the tire is 52,500 and it will be work for 25,000 kilometers. 52,500 divided by 52,500 divided by 25,000. 2.1 per kilometer will be tire expense. Tire expense is a running expense. It is not like depreciation will have to take an assumption. So tire expense okay. As far as suggested is concerned, they have taken even tire expense as a fixed expenditure. Please understand, I want to match my answer with the suggested, so only I am doing this. Depreciation of 16,000, also I am taking it as running. Depreciation treated as running because it is based upon kilometers traveled. So I am taking it as a running. And cost of tire is a running expenditure. So running of tires, it is 3,200 into 2.1. We have found out the answer 2.1. So it will be 3,200 into 2.1, which is the 6,720. All right. What is this expenditure? Tire depreciation and machine depreciation, and we have taken it as a running cost. Why we have taken it as a running cost? Because it is given on per kilometers traveled basis kilometer. Otherwise, I feel depreciation of lorry should be treated as fixed and tire expenditure should be treated as variable. But any assumption can be taken based upon the question given. So I have removed depreciation of lorry from here and I have transferred it to running cost. All right. So cost of tire and life of tire is that. Vehicle license cost is 7,800 per annum. This will be fixed. Vehicle license cost 7,800 per annum. So for 4 weeks will be into 4 divided by 52. Answer will be 7,800 into 4 divided by 52 is 600 rupees. Other overhead cost 41,600 per annum. Other overhead cost 41,600 per annum. For 4 weeks, it will be 41,600 into 4 divided by 52. 3,200. Let me do it once again. 41,600 into 4 divided by 52. So it is 3,200. Lorry operates 5 days a week. This we have considered. Any other expenditure which is pending to be calculated in this? No. So we can find out our running cost. We can find out our fixed cost. My running cost will be 24,000 plus 800 plus 2,400 plus 16,000 plus 6,720. 49,920. And my running cost will be, fixed cost will, this is running cost. Fixed cost will be 10,000 plus 3,200 plus 1,400 plus 600 plus 3,200, which is 18,400. Total cost 49,920 plus 18,400, 68,320. 68,320 rupees is my total cost. What other answer they want? They want a statement of total cost for operating a vehicle for 4 weeks period, analyzed into running and fixed. This we have done. Calculate the vehicle operating cost per kilometer and per ton kilometer. So vehicle operating cost includes both the cost. This is answer number 2. Cost per ton kilometers. Now they are saying find it out on per annum basis. It will not make any difference because it is per ton kilometer. So what is total cost for 4 weeks? 68,320. What are ton kilometers for 4 weeks? If you take cost of 4 weeks, ton kilometers should be taken off 4 weeks, which is 16,000. My cost per ton kilometer will be 68,320 divided by 16,000. That is 4.27 rupees, 4.27 per ton kilometer. They also want answer for kilometers, cost per kilometer, which will be 68,320. My cost remains same. Kilometers are 3,200. So it is 68,320 divided by 3,200. 21.35 rupees per. So they have asked us to find out cost per ton kilometer also, cost per kilometer also. We have found out both the cost. Now understand, if you are having 4 weeks ton kilometers and if you are having 4 weeks cost, there is no need to find out answer on per annum basis. It is absolutely all right. Your answer will remain same. Per ton kilometer and per kilometer, your answer remains same. Whether you find it out answer for 1 week, 4 weeks or per annum. Why? If you are doing it for per annum, you are going to find out cost per annum and ton kilometers also per annum. If you are calculating it for 4 weeks, you are going to find out cost for 4 weeks, also ton kilometers for 4 weeks. So it does not make any difference. Your per ton kilometer answer is going to remain same. Let us go to next question, which is 12.13. A hotel is being run in a hill station with a 200 single room. So this is an hotel question. and it is on hill station. The hotel offers concessional rate during 6 off-season months in a year. So 6 months are off-season. During this period, half of the full room rent is charged. The management profit margin is targeted at 20% of room rent. The following are the cost estimates and other details for the year ended 31st March 2019. Occupancy during the season is 80% and off season it is only 40%. What is off season in normally hill station is winter season. Total investment in hotel is 300 lakhs, which 80% relates to building and balance to the furniture. Room attendants are paid rupees 15 per room day on the basis of occupancy in a room in a month. Expenses, staff salary excluding the room attendants, repairs to building, laundry charges, interior charges, miscellaneous expense. And this all are cost estimate, other details for the year ending. So all are per annum. Annual depreciation is to be provided on 5% of building and 15% of furniture and other equipments on state line basis. Monthly lighting charges are 110, except in 4 months in winter when it is 30 per room. And this cost is on the basis of full occupancy for a month. Monthly lighting charges are 110, except in 4 months in winter when it is a 30 per room, and this cost is on the basis of full occupancy. So light will be a technical point. You are required to work out the room rent chargeable per day both during the season and off season months using the foregoing information. Assume a month to be of 30 days, winter season to be considered as a part of off season. And what is winter season? 4 months in winter. So let me first find out total number of room days. Concentrate. During the season, there are 200 rooms and it is 6 months and occupancy during the season is 80%. So 200 rooms will be for 30 days into 6 months. So this will be room days, the total room days for 6 months, which is season, which will be 200 into 80% is 160 rooms for 30 days and for 6 months. So 28,800 room days is going to give you revenue during the season. Off season, your room in hotel remains 200, but only 40% are filled up for 30 days into 6 months. So room days during off season will be, this will be 80 into 30 into, that is 14,400 room days. There is no need of totaling this room days. Please concentrate. If the room rent is X over year, it is 0.5x over year. So they are not equivalent units. You should not add it. Even if it is added in the answer, you should not add it. Season, off season, this will be my room days. Now concentrate. I will be finding out all cost per annum. Once I have got room days, it will be easy to find out answers. I am finding out cost per annum. Answer will be in rupees. Occupancy, total room attendants are paid rupees 15 per room day on the basis of occupancy. So when the room is occupied, they will be paid, otherwise they will not be paid. And it is 50. So I can make this total for finding out cost, right? So even if it is done in the question, that is good. 28,800 plus 14,400, 43,200. So even if the revenue of this rooms is different, the cost is same. That is room attendant cost of rupees 15 per room day. room attendant cost is rupees 16, sorry, 15 per room day. It is 15 and room days are 43,000. Outer column, let me do it last. Staff salary excluding the room attendant is 8 lakhs. Repairs to building is 3 lakhs. Laundry charges 1,40,000. Interior charges 2,50,000. These are all expenditures related to hoteling business. Interior charges are 2,50,000. After interiors, miscellaneous expenditures are 2,200,000. Annual depreciation is to be provided on building 5%. Depreciation on building, it is a 5%. What is building cost? 80% of 300. 240 lakhs. It is lakhs, yes. And then depreciation on furniture will be 60 lakhs multiplied by 15%. And other equipments on straight line basis, we have directly done percentage. So every year the depreciation is going to remain same. Monthly lighting charges. Now, this is one of the most important point in this particular question. Monthly lighting charges are rupees 110, except in 4 months in winter. Now, there is a let us first read and then I'll tell you what are the things we are doing. Except in 4 months in winter when it is rupees 30 per room. So this lighting charges are per room. When it is 30 rupees per room in 4 months in winter. Now, off season is the 6 months. So winter should be 6 months, right? They have told that 6 months is off season. So what will happen in 6 month season? There will be 110 rupees per room lighting charges. In 2 months of off season also there will be 110 rupees per room which will be lighting charges. And only for 4 months in off season, actually off season is of 6 months. But of that 2 months there will be lighting charges of 110. 30 per room, and this cost is on the basis of a full occupancy for a month. Please concentrate on calculation because calculation will be typical. I am doing lighting charges. How many rooms are there? 200 rooms. What is, I am talking about a season of 6 months. What will be occupancy? 80%. So how many rooms will be used? 160 rooms. Multiplied by how many months we are talking about? 6 months. And what is the cost? Cost is 110 rupees per room per month. 110 rupees per room per month. See, if you cancel this rooms and this months, you will be getting answer in rupees. So it is 200 into 80%. That is 160 rooms will be having 110 rupees rent. So per month cost is 17,600 multiplied by 6 months is 1,05,000 600. Now, let us talk about off season 2 months when lighting charges are going to be 110 rupees per room per month. Because they are telling that lighting charges will be lower only in 4 months, that is 30 rupees per room. So only in 4 months of off season, it will be 30 rupees per room per. Sir, in off season, all 6 months it will not be 30 rupees. No, in 2 months it will be 110 rupees and in 4 months it will be 30 rupees. How many rooms are there? 200. What is the percentage occupancy? What is percentage occupancy as far as off season is concerned? Off season is only 40%. So only 40% room lighting charges will be there. Into, we are talking about 2 months, you will be getting this answer. Here also there are 200 rooms with 40% capacity, but for 4 months. Sir, why we cannot calculate this 6 months together? Because the room charges are different. The lighting charges per room is different. So for 4 months, it will be 200 into 40% into 2 months into 110. It is 17,600. 17,000. This will be 200 into 40% into 4 months into 30 will be 9,600. And my total lighting charges will be 1,05,600 plus 17,600 plus 9,000, 1,32,800. This will be my lighting charges, 132,800. Lighting is 132,800. So lighting charges was excellent as far as this question is concerned. You are required to work out, that is all right, that is a question, and we are through with this. Now, question is, sir, why I have not multiplied by 30 days over here? Because this rate is per month. It is not per day. Per month, your lighting charges are going to be 110 and 30 rupees. Many a times, a student also tell me, sir, it is on the basis of full occupancy for a month. So should I not take 100% capacity? No. Full occupancy means how many rooms are occupied, the lighting will be charged. That is the meaning of full occupancy. It is not, it will be charged at 100% capacity, right? 1,32,800 we have considered. We can find out the cost. First, let me find out outer column. 43,200 into 15, 6,48,000. 240 lakhs into 5%, which is 12 lakhs. And 60 lakhs into 15%, which is, I will be getting total cost by totaling all this cost. 6,48,000 plus 8 lakhs plus 3 lakhs plus 1,40,000 plus 2,50,000 plus 2,200 plus 12 lakhs plus 9 lakhs plus 132,800. 45,71,000 will be total cost for this particular business. So total cost is the 45,71,000. I want to add some profit margin. How much profit is to be added? Room rate charge, this will add 20% on room rent. So on sales, Total cost plus profit will be my room rent. And I want 20% on room rent. So this will be 80. Simple cross multiplication will give me the answer. 45 lakh 71,000 into 20 divided by 80 will give me profit. 11 lakh 42,750. 11 lakh 42,750 and 45 lakh 71,000 plus 11 lakh 42,750 will give me 57 lakh 13,750. 57 lakh 13,750 should be my room rent in off season as well as also in on season. My total room rent should come to 57 lakh 13,750. But I charge a separate room rent as far as the season is concerned and off season is concerned. How much total room rent I am going to get? 28,800 x 28,800 are the room days in on season multiplied by x. This is my revenue for on season of 6 months. And off season rooms are 14,400 and I charge 0.5x. This is what is written, right? During this period, half of the full room rent is charged. So you will be getting only 0.5x and you want a total room rent of 57 lakh 13,750. So solving this will be 28,800 m plus 14,400 divided by 2 is equal to m plus 57 lakh 13,750 divided by MRC, which is 158.71. X is equal to 158.71 rupees will be room rent in on season. What will be room rent in off season? Will be half x. So it will be 158.71 divided by 2, that is 79.355 will be room rent in off season. A good question as far as that lighting point was concerned. Other things we have done before also, but lighting was excellent point as far as this question is concerned. Next question is 12.14. SEZ Limited built a 120 kilometers long highway and now operates a toll road and collect tolls. The company has invested 900 crores to build this road and has estimated that total 120 crore vehicles will be using this highway during 10 years. So they are having permission to collect toll for 10 years. They have spent 900 crores and build up 120 kilometers long highway. And 120 crores vehicles will be passing on this highway. The other cost for the month of June 2020 are as follows. So all the calculations will be doing only for 1 month, that is June 2020. Salary. Collection personnel 3 shifts, 5% per shift, rupees 200 per day per person. Supervisor 3 shift, 2 person, 350 per day per person. Security personnel 2 shifts, 2 persons per shift, 200 days per person. Toll booth manager 3 shifts, 1 person, 500 days per person. Electricity, telephone, maintenance cost, the company needs 30% profit over total cost. Calculate the cost per kilometer. Calculate the toll rate per vehicle. Now, how many days will be there in June will be 30. It is not given in the question, but the toll operates 24 hours and it operates on all days. There are no holidays in toll business. So we will be assuming June 30 days will be total number of days in a month. All right. First, 900 crore rupees was billed for road as an estimated total 120 crore vehicles. So 900 crore invested. I need to find out a depreciation for 1 month, right? So depreciation will be 900 crore, which is for 10 years, right? I want to find it out for a month. So divide it by 12. Answer will be 90 divided by, which is 7.5. Will be my depreciation. Also I need to find out how many vehicles will be passing in the month of June. Total how many vehicles are passing? 120 crores. In how many years? 10 years. Divided by 12 months. I will be getting vehicle passing in a month. Will be 12 divided by 12. That is 1 crore vehicles. Will be passing in a year. 120 divided by 12 is 10. And this is 1 crore vehicles. Alright, we can find out salary for the month of June. Cost for the month of June. This will be rupees and we'll be considering all cost. First, depreciation 7.5 crores. Then collection personnel 3 shifts of 5% and 200 days per person. That is collection personnel. 3 shifts, 5 persons, 200 rupees per day multiplied by 30 days. Supervisor 3 shifts, 2 person per shift, 350 days per person multiplied by 30. Security personnel 2 shifts, 2 persons per shift, 200 per day per person. Tool booth manager 3 shifts, 1 person per shift, 500 days per person, 500 per day per person. This will be my cost. Let me find out all costs first. It is 200 into 30 into 5 into 3. 90,000. This will be 350 into 30 into 3 into 63,000. This will be 200 into 330 into 4. This 24,000. This is 5 3s are 15, 45,000. Electricity 1,50,000. Telephone 1 lakh. Maintenance cost 50 lakhs. $50 lakhs per month. The company needs 30% profit on overall cost. Have I considered all the cost? Yes. So my total cost including depreciation and everything will be 750 lakhs plus 90,000 plus 63,000 plus 24,000 plus 45,000 plus 1,50,000 plus 1 lakh plus 50 lakhs. It is 8 crore 4 lakh 72,000. 8 crore 4 lakh 72,000 will be my total cost. I want to find out cost per kilometer. So cost per kilometer will be 8 crore 4 lakh 72,000 rupees divided by the road is of 120 kilometers. I want to find out per kilometer. So divided by 120 will be 80472,000 divided by 120, which is 6,70,600 rupees per kilometer per month. So per kilometer, the cost is 6,70,600 per month, per kilometer per month. Second question, this is answer of first. Calculate the toll rate per vehicle. Now, what is the cost? 8 crore 4 lakh 72,000. I want a desired profit because my toll rate will include the profit. I want 30% profit on cost. 30% on cost will be 8 crore 4 lakh 72,000 multiplied by 30%. 2 crore 41 lakh 41,600. This should be my total revenue or total takings. 8 crore 4 lakh 72,000 plus 2 crore 41 lakh 41,600. It is 10 crore 46 lakh 13,600. Should be my total revenue in rupees. How many vehicles will pass? We are assuming any vehicle, the toll rate is same. Any type of vehicle, two-wheeler, four-wheeler, any vehicle, the toll rate is same. Then how many vehicles will pass? We have already calculated in June, total vehicle will be passed is 1 crore. So my revenue per vehicle should be 1046 13,600, that is 10 crore 46 lakh 13,600 divided by 1 crore. This will be 10.46 rupees per vehicle will be my toll tax collected, which will be answer of second question. Next question, 12.15. ABC Healthcare runs an intensive medical care unit. Similar type of question we have done before. In that extra bed we had not considered as our revenue unit. In this question we'll consider it as our revenue unit. Both are absolutely correct method. For this purpose, it has hired a building at a rent of 50,000 per month with an agreement to bear repairs and maintenance costs. So we will have to do repairs and maintenance costs. This is per month. The unit consists of 100 beds and 5 more beds can be comfortably be accommodated when the situation demands. Though the unit is open for the patient all 365 days in a year, scrutiny of the accounts for the year 2020 reveals that only 120 days in a year, the unit had full capacity, 100 patients per day. For another 80 days, it has on an average only 40 beds occupied per day. But there were occasions when the beds were full and extra beds were hired at a charge of rupees 50 per bed. This does not come more than 5 beds above the normal capacity on any one day. The total higher charges for that extra bed incurred for the whole year amounted to rupees 20,000. So it is only 120 days in a year. plus 100 for another 80 days. So total 200 days. It had an average, that is all. The unit engaged expert doctors from outside to attend on the patient, and the fees were paid on the basis of the number of patients attended and the time spent by them, with an average workout of 30,000 per month in a year 2020. The permanent staff expenditure are as follows: to supervisor, nurses, ward boy, other expenses, repairs and maintenance, food supply, caretaker, laundry charges, medicine supply, cost of oxygen, general administrative charges. What is the profit per patient day? Patient day will be my cost unit. Made by the unit in the year 2020 if the unit recovered an overall amount of 200 per day on an average from each patient. The unit wants to work on a budget for the year 2021, but the number of patients requiring medical care is a very uncertain factor. Assuming that the same revenue and expenses prevail in the year 2021 in the first instance, work out the number of patient days required to break even. Whenever you need to find out a break even, you will have to distribute your variable cost and fixed cost separately. You cannot find out total cost, otherwise break even is fixed cost divided by contribution per unit. So contribution finding out is nothing but sales minus variable cost, so you'll have to separate your variable and fixed cost. Also, try to understand, you are working only for 120 plus another 80. That is, you will be working only for 200 days out of your 365 days. At least your capacity utilization is given only for this days. Now, what will be the cost unit? Try to understand. In previous example, I wrote this, bad days. Then we also wrote this, patient days. Actually, try to understand it. The cost unit is cost for one patient for one bed for one day. Right now, one patient will not occupy two beds. It is possible sometimes, because say a patient is very rich, there are two beds in a room and only that room is empty, then one patient may occupy two beds. So what should be the cost unit's name? I'll tell you. It should be patient bed days. But we can make it bed days, we can make it patient days. You need to understand what does it mean. It means one patient, one bed, one day. This is your cost unit. So if the cost is coming 10, the cost is 10 rupees for one patient occupying one bed in one day. In this, it is given patient day. We will be writing down this cost unit, patient day. But you need to understand this, right? That it is only one patient occupying one bed, and so we can write it down, patient day. All right, let us find out patient days. 120 days in a year, the unit had a full capacity. 120 days with a full capacity of 100 beds. One bed will occupy one patient, so it is 12,000 patient days or patient bed days. And for another 80 days, it is only 40 beds occupied per day. And there are extra beds. See, in previous question, we considered this extra beds only for cost. This is a more valid assumption that if you are providing extra bed, you will be charging extra also. So, you have expended 20,000 rupees and each extra bed is hired at a charge of 50 rupees. So, how many extra bed in a year you might have hired? 20,000 divided by 50. 20,000 rupees divided by 50 per bed. This will be 400 more beds. So 400 more patient days, your capacity was full. There were some extra patients. You hired it, paid rupees 50, but you will be getting revenue on this 400 bed days, right? My total will be 15,600 patient. As I told you, we need to segregate between our fixed and variable. Let us find out our cost. Statement showing total cost. I will be distributing between fixed and variable. This is rupees. For this purpose, it has hired a building, a rent of 50,000 per month. Now, should I find it out for month or per annum? I found out patient beds per annum. So this should be also per annum. Rupees 50,000 per month is fixed. It is 6 lakhs rupees. The unit costing 100 beds. This is not information of cost. Yes, that extra bed, I am treating it as variable. It will be variable, right? If the beds will increase, cost will increase. If the bed will not increase, cost will not increase. The unit engage expert doctors outside, which average work out to be 30,000 per month. So doctors is also variable. 30,000 per month is 13,000 into 12, which is 3,60,000. Now, why doctors are treated as variable? Please understand, doctors' fixed salary is fixed cost. Doctor coming based on patient wise is a variable cost. The permanent staff expenses are as follows. 2 supervisors, each at per month salary of 5,000. So supervisor's salary 5,000 for 2 supervisors for a month. 4 nurses, each at a per month salary of 3,000. Nurses, 4 nurses, 3,000 salary per. 2 ward boys, each at per month salary of 1,500. Ward boys 1,500 to per. Repairs and maintenance, now those all are fixed, right? Repairs and maintenance is 28,000. Repairs and maintenance can be treated as variable, can be treated as fixed. I will be treating it what is treated in the answer. They have treated this as fixed cost. Repairs and maintenance is 28,000. Also, it is not dependent upon number of patients, right? So it should be treated as a fixed cost. Food supplied to patients will be variable, 4,40,000. Food is variable, 4,40,000. If number of patients increases, this cost will increases. If number of patient decreases, this cost will decreases. Caretaker and other services for patients, 1,25,000. Now, we are assuming, please understand, we are assuming that caretaker will be hired when the patient is there. He will be paid only when patient is there. If he is hired permanently, see, you are not hiring doctor permanently, so caretaker will also not be hired permanently. 1,25,000, I am treating it as variable. Let me see what they have taken. Yes, they have taken variable. Laundry charges for bed linen, 1,40,000 will be variable. 1,40,000 laundry charges right? If the bed will be occupied, there will be laundry, and so you will incur laundry charges if there are more patients, less laundry charges if there are less patients. Medicine supplied 2,80,000 variable. Cost of oxygen, etc., other than directly borne for the treatment of patients, 75,000. Now try to understand, when the oxygen is given to patients, it is recovered from him. The money is recovered from him. This is the oxygen supply which is a fixed required to run this hospital. And how much it is there? 75,000. So whether patients are there or not there, this supply is to be there. 75,000 rupees, I'll treat it as fixed. General administrative charges allocated to unit is 71,000 as fixed. And I have considered all the expenditure. Nothing is pending from here, no. From here, no. From rent, we have considered, right? We can total out our fixed cost and variable cost. This is 1,20,000. This is 3,000 into 4 into 12. 1,44,000. This is 1,500 into 2 into 12. 36,000. My total answer of fixed cost will be 6 lakhs plus 1,20,000 plus 1,44,000 plus 36,000 plus 28,000 plus 75,000 plus 71,000. 10,74,000. And my variable cost will be 20,000 plus 3,60,000 plus 4,40,000 plus 1,25,000 plus 1,40,000 plus 2,80,000. 13,65,000 will be my variable cost. Total cost will be 10,74,000 plus 13,65,000. 24,39,000. 24,39,000 will be my total cost. Now, let us see the question. What is the profit per patient day made by the unit in the year 2020 if the unit recovered an overall amount of 200 per day on an average from each patient? I'm finding out answer number 1. Please concentrate. What is first my total profit? It is my sales. How many patient bed will be sold? 15,600. It will be sold at the rate of rupees 200. This is my sales. Minus, what is my cost? 24,39,000. 24,39,000. So my profit will be 15,600. I am recovering 200 rupees. 31,20,000 minus 24,39,000. There was something in memory. 15,600 into 200 is equal to M plus 24,39,000 M minus MRC. There is some mistake. 15,600 into 200. 31,20,000 minus 24,39,000. So it will be 31,20,000 minus 24,39,000, which is 6,81,000. This is my profit. What they want? Profit recovered overall amount 200. What is profit per patient day? Profit per patient day will be 6,81,000 is my total profit, divided by 15,600 are patient days. So 6,81,000 divided by 15,600, 43.65 is a profit per patient per day per bed, right? It is profit per patient bed day. This is answer number 1. Answer number 2. The units want to work on the budget for the year 2021. But the number of the patients requiring medical care is a very uncertain factor. Assuming that the same revenue and expenses prevails, work out break-even patient days. So I want a break-even point in patient days. Number 2. First, I'll be finding out PV ratio. PV ratio is contribution upon sales multiplied by 100. My contribution will be sales. What is my sales? 31,20,000 is my sales, minus only variable cost. Variable cost is 13,65,000. 13,65,000. And what is my sales is 31,20,000 multiplied by 100. I will be getting PV ratio. Again, if you have not understood break-even point, this will not be understood. Once you do break-even point, this will become very easy. 13,65,000 divided by 31,20,000 multiplied by 100. It is 56.25%. What is my break-even point in rupees? This much amount of sales is to be done if I want to achieve break-even. It is fixed cost divided by PV ratio. What is fixed cost in our question? Fixed cost is 10,74,000 divided by 56.25%. 10,74,000 divided by 56.25%. It is 19,09,333. 19,09,333 rupees should be my break-even sales. So what I should be charging from one patient for one bed for one day if I want to break even, or how many number of beds I need to sell to break even. It is not what charges, right? Charges are fixed, 200. How many patient bed should I give services so that I am earning no profit, no loss? I want 19,09,333 rupees. Per bed gives me 200 rupees. I will be getting answer in patient or patient days. It is one and the same. 19,09,333 divided by 200, which is 9547. So in a year, if you get 9547 patient days, patient bed, you will be incurring no profit, no loss. If you give services to more patient days, that is, if your patient days are 10,000, you will be having profit. If your patient days are 8,000, you will be incurring losses. What was good point in this question was this. Otherwise, same question we have done before with a different assumption that this is not my revenue beds and hence I'll not be considering over here. So in that question, we have not considered it over here. In this question, we are considering both are good assumption. This is more better. As you are providing the services, you will charge the revenue and you need to consider it for patient bed. So this was the only different point. Otherwise, both questions are absolutely same. Next question, 12.16. MRSL Healthcare Limited has incurred the following expenditure during the last year for its newly launched COVID-19 insurance policy. Office and administration cost, claim management cost, employee cost, postage and logistic, policy issuance, facility cost, cost of marketing of policy, policy development, policy servicing cost, sales support expenses, and IT cost. IT cost is question mark, but believe me, it is just like a puzzle. Number of policies sold is 2,800. Total insured value is 3,500. Cost per rupee of insured value is 0.002. So what should be my cost? It is 3,500 into 0.002. That is 3,500 into 0.002. That is 7 crore rupees. So this should be my total cost. All other costs are given. Balancing figure will be IT cost. It is as simple as this. You are required to calculate the total cost of COVID-19 insurance. Now it is just the summation. You just need to total it out. Segregating the cost into four main activities, namely marketing and sales. So when I will be finding out the total cost, I will be segregating in marketing and sales cost in rupees, then operations, then IT cost and support functions. So let us see all the cost and segregate it. Office administration cost will come in operations. Claim management cost will come in operations. Claim management is when a person dies or when a person dies of COVID, you will have to pay them claim money, and for that management, it is claim management cost. Again, it is operations. Employee is also operational cost. Okay, employee can be treated as operation, can be treated as support cost. Postage and logistic is support cost. Policy issuance cost. Policy issuance cost should be operation cost. Facilities cost is support cost. Cost of marketing is marketing cost. Policy development is marketing cost. Policy servicing cost. Policy servicing cost. What is policy servicing cost? When the policies are issued, you need to give that particular service. I think it will come in operations. Sales support expenses is marketing. IT cost will be IT. Employee cost, you can keep it in operation, you can keep it in support. I am keeping in support. Employee is operational cost also, but I want to match answer with the book, so I am keeping it in support. Office administration operation 48 lakhs. Claim management operation 3,80,000. Employee cost support 16,20,000. Postage and logistics support 32,40,000. Policy issuance cost operation 29,50,000. Facility cost support 46,75,000. Cost of marketing, marketing cost 1 crore 38 lakh 90,000. Policy development cost 35 lakhs. Policy servicing operation 96 lakh 45,000. Sales support expenses 32 lakhs. And IT cost is question mark. So I can find out this question mark because I know that total cost is 700 lakhs or total cost is 7 crore. So I can easily find out my IT cost. What is the balancing figure will be IT cost. So let me find out total cost of marketing and sales. 1 crore 38 lakh 90,000 plus 35 lakhs plus 32 lakhs. 2 crore 5 lakh 90,000. 2 crore 5 lakh 90,000. Operations to operate the policy 48 lakhs plus 3 lakh 80,000 plus 29 lakh 50,000 plus 96 lakh 45,000. 1 crore 77 lakh 75,000. 1 crore 77 lakh 75,000 is operations. Yes. Office administration is not operational cost for policy. It is a support function. See, what will come in operation cost is only expenditure related to operate the policy. Office administration is support staff. Yes, so employee cost will also come in support function. There's no difference of opinion that it will also come in operations. So office administration, I'm taking it in over here, 48 lakhs. Let me change it over here also. Office administration support and employee cost, there is no difference of opinion. It will be support. So this will be, let me find this again. Three lakh 80,000 plus 29 lakh 50,000 plus 96 lakh 45,000. 129 75,000. What is support function cost? 48 lakhs plus 16 lakh 20,000 plus 32 lakh 40,000 plus 46 lakh 75,000. 143 35,000. Now, what will be IT cost balancing figure? Will be 7 lakhs, 7 crore minus 143 35 minus 129 75,000 minus 205 90,000. That is 2 crore 21 lakhs. 2 crore 21 lakhs is the balancing figure. Now this is total cost and segregation of total cost. Please try to understand after writing down the answer. Marketing and sales are all advertising, promotion and each and every. Sir, policy development is a marketing cost? Yes. How you will be selling the policy, what benefits you will be giving, what commission you will be giving. This all is a policy development will included in marketing and sales. Operating of policy, claim, issuance, service. So what you do in policy? You issue the policy, issuance cost. Then you service the policy, you telephone for your renewal premium, and all this will be again policy related cost. And then you manage your claim, that will be policy claim management. All will be operations of the policy. Any other persons who are doing it, electricity cost, other cost will come in support cost. And if you are selling your policy, online IT development and other IT related cost will come in IT cost. Any other supportive cost will come in support functions cost, and this is my total cost and segregation of total cost. What they ask me is this: calculate cost per policy. Total cost is 700 lakhs. Number of policy are 2800 policy. So cost per policy will be 7 crore divided by 2800, that is 25,000. Is nothing but your cost per policy. So what was most important in operating costing? Our cost unit. A truck traveling and carrying some tons, a ton kilometers, kg kilometers, patient days, passenger seats. This type of unit comes when you are in a service sector and not you are manufacturing goods. Service sector cost unit change, otherwise the cost concepts remain same. Fixed variable concepts also remains same.